King Laszlo. Well, everything was fine? Yes, perfect. Good to hear that. Good to hear that. Laszlo, if you are here, you see? Then thank you very much for being here. Perfect. Just 1 second. Sorry. Alright, so let's start. We have a lot of things going around and probably a lot of opportunities. So let's start to cover that. The first thing is the euro against the Aussie. In my point of view, we are reaching a very interesting point, and something bearish is about to happen very soon. Why? Well, first of all, the 4-hour chart, we can see the pair is trying right now, right, live, to create a double top, right? It's trying to do that right now. It's pretty strong. We have a beautiful divergence, and this is regular, right? Why this is regular? Because, well, this all this continuing divergence we have had here did the job every time, and since then it broke the divergence line and starts to create a new divergence, right? It doesn't really matter if it's regular or continuing on the 4-hour chart. As on the daily, it does create a continuing divergence, and it does create 20 candles, right? Very powerful sign for a bearish move to come. More than that, take a look for something very important here. If we measure this line, okay, I on purpose go through these points, as this was a gap and this was a false break from this point, this point, this point, and this point. If we measure this line, of course it could be with a bit, 1 second, with a bit different angle like that, okay. Still the conclusion is the same. We are reaching a top and we are reaching very important level, right? The meeting of these points. More than that, if we take a look on this trend line as well, it also brings us pretty much to the same point, right? Pretty much the same point. So it could still play around this high, but it also could, it's pretty much there, okay? If it will retrace from here, it will still count like it did retest this point meeting, okay? Missing of 20, 30, 40 points on a daily chart is actually nothing, okay? But that's what we have. So we should be looking for opportunities to sell. Now we have a very powerful sign coming. That's fourth high in a row. You see that 1, 2, 3, 4. And now let's compare here. We have 1, 2, 3, and 4 is right here. Now, of course, this was the first high, so 4 could be created right here, right now. Okay, and that's why we have two scenarios to sell the euro yen. Scenario number 1 is the classical condition. If it pushed higher, like to 132.50, 132.70 approximately, if it makes the push there, we will see another high probably on the MACD, and then a change of the bearish to the bearish slope on the MACD histogram will give us the okay to go, and to sell. From here, I would expect it to drop down all the way to cover the opposite Bollinger Band, at least. Why at least? Because it could easily push and complete all the way back to this trend line, as we are still moving inside the channel, on the daily channel. So definitely we could see the pair topping here, and from here starting to make very strong download. Okay? Another thing to remember, we are out of average true range channel, and of course we are also almost on out of weekly average true range channel. Another bearish strong sign. Combined with all the things together, we should be looking to sell. Now this is the first scenario, as I said. We have two. The second scenario is on the 4-hour chart with the current double top. Sorry. And we have here a trend line. So once it completes the double top and once it is making this break below the line, that will be pretty strong sign. You want to go with a regular trade and we have to wait for a break. It will be much stronger sign. If we want to go with investor style, we could start with a bearish pattern here on the 4-hour chart, and MACD to turn it to the bearish slope again. But again, and of course the next entry will be on the next high, as I mentioned before. Or alternatively, as I said earlier, it will be much stronger to wait for a break of this line. That will be pretty good confirmation. If you take a look on the RSI, it follows pretty much exactly on the same line. And so a breakdown of both would give a very strong bearish call. Questions so far? Again, as we have on a daily chart 20 candles, right? So we could expect a drop down to the lower band first of all. Then we could expect it to go deeper as we have a trend line, and that could be pretty bearish. The drop down the euro Aussie means could mean two things. One, drop down on the euro dollar, stronger than in the Aussie dollar. Two, that the US dollar is coming to the end of its strengthening, and from now on it will go to the opposite direction, which means the majors will go up. We will talk about it today because I still think we will see some correction, but it will be only correction, and I do think the US dollar has much more to gain strength. It could happen on every day, Siva. It could happen today, it could happen tomorrow. I have no idea how fast it will work and when exactly it will work. The one advantage with the Euro Aussie sell is that the swap is with us, right? The swap is with us, and that's important once you trade the downside. The next pair on the list is the Euro Pound. I sent you an order on the night, yesterday evening, sorry. Buy limit. Well, I was expecting a drop back to this area, approximately to this trend line, right here. Okay, something like that, and then pushing it up. Instead of that, it's pushing right now. Be careful with buying here. Well, first of all, because it has many resistances on the 4-hour chart, and second, we are probably in front of an extreme on the 4-hour chart. This is a very good bullish situation right now, as we have a bullish convergence. We have a bullish convergence right here, right, between these two highs, which means we should be looking to buy any pullback. The pullback still could be to the level as I expected. That could be 084.90, 084.95. It could be even a bit deeper, as there is a trend line right here following the pair, right? So it could drop back to 084.80, 084.70 even. But then I do think the Euro Aussie should push higher. Here, this is the daily chart. More than that, on a daily chart, it also right now, as you can see, breaking through the Bollinger Band. I do think it's going to be limited, as based on the weekly chart, we are still below the 20 MA. So I think up but I do think it's going to be limited. How limited it could be? The first place it could take us is again to 086, 086.40. That's maybe even a bit higher. This is the range in between the resistance and the gap. If you remember the gap here on from March, right? It could take us to this level. I do think that's pretty much all, and from there, the euro pound will most likely start another down move. So, to make long story short, I do think that we are going to be traded on the upside for some period right now, and that's our trend line to follow. Every pullback to inside this range, that could be starting from 084.70 as I mentioned, sorry, or even bit higher, even 085. All goes correct, and we should be following the 4-hour chart, hitting the bullish convergence. Sorry, I'm confusing totally everything. Sorry. And on the 1-hour chart, this continuing divergence that is forming, plus 20 candles right. So every drop down here, and we get the okay to go and to buy. Okay? So as for now, I am holding the order exactly on the same level, but of course, playing very, very close and watching the price action very, very, very close, as we might start the up move from 085.15 or anything like that. Okay, we are going on the up side. So that's about the euro pound. Questions so far? Maybe Pana, maybe 86. Maybe I think it's even higher, very potential. But this is this rises, creating. Yes, exactly. Make another sell from the next high, exactly. Okay, no questions regards that. Let's continue. Euro Aussie we talked. The next interesting pair, it's not a regular trade, but it's investor style, is the dollar ZAR. Dollar ZAR, we started the attack here, as you know, the 940, the historical 940 resistance, and it goes pretty much impressive above that. That's all good, as I remind you, this trade is based on weekly and monthly. On monthly chart, there's 20 candles right on the volume. On monthly chart, we still could go higher, and that's why right now there is nothing to do or to put any other order. Dollar ZAR is a perfect swap pair, as we know. This is something to hold. Note and remember, it could drop right from here, from this resistance, or it could take us again to something like 10. Why not? But from there, the drop down will be pretty impressive, and I remind you, we are talking here about monthly, 20 candles right, monthly continuing divergence, weekly continuing divergence combination. So, and right now on the daily chart, it's bend to bend. It's pretty narrow range, so we can go for duplication. Duplication right from here means something like 970, also very potential. Right there, we could see another extreme forming, extreme divergence, and from there we could expect a drop down. Anyway, this is the preferred pair to hold for a long run, because it's really good swap pair. The longer the period you hold, the stronger, the more swap you get. And holding that for a few months, for example, could take few extra percentage to the pocket. So it's pretty good. No. Nothing to add right now. There is no clear level. Nothing to do right now, and no need. It's very important not to be overexposed on a narrow range. 920, 940 are very strong levels. From here up 970 or 10, there is nothing clear. So we will follow that and wait and hold. This is really well swap pair. That's important. All right, now the majors. I think we have some good opportunities coming, and let me explain why I think so. Euro dollar, as we can see right here, after the break of this line, it's retesting it right now. From one side, the euro dollar has here, between these spots, it has a bullish hidden divergence. That's from one side. From other side, what's going on with this chart is jumping. From other side, between these two lows, it has a bearish convergence. This is definitely not classical convergence, as this is not the end of an up move, but as this entire picture here looks like a head and shoulders, that could be still pretty strong bearish sign. Looking on a weekly chart, we're still under bearish pressure. Everything is still down. Stochastic is aiming down, RSI crossing 50 down, MACD is still bearish. And the most important fact, Draghi must to have cheap euro. There is no other way to the eurozone. No other way. With the fact that the fact that they have a pressure on them, and they might start also some quantitative easings on the future, it all probably will affect the euro and the euro pair. So we should be looking in this, because of that, to the sell direction. On a daily chart, we understand that that's what we have. On a 4-hour chart, we have right now bearish continuing, a bearish hidden divergence. You see how sick I am. I'm confusing everything. I'm confusing all the divergences and everything. Long time it didn't happen to me. So between every two highs you choose, from here to here or from here to here, we have bearish hidden divergence. There is one thing to note and to remember. We had a bullish divergence before that. Can you see that? A bullish divergence before. It means it can go up to the third resistance, secret number 3. I'm sure you remember that. That was resistance number 1. This is resistance number 2. That's pretty much the range, right? And that would be the resistance number 3. And I'm talking about 130.30. By now, that's exactly your level. And if we take a look here, there is a trend line on the euro dollar as well. From my point of view, the euro dollar is about to reach somewhere in between these levels, create a combination of a hidden divergence that is already here right now, and a bearish continuing divergence, and right from this range, the euro dollar will start another down move. And that's exactly how we will be trading that. Of course, I will trade it as well. Of course, I will trade it as well. All right, that's about the euro dollar. That's the levels, and that's what we have. So, sell the rally. That's pretty much what it is. There is one thing to remember. The down move can happen earlier, and we have to be prepared for that. How can we be prepared for that? There is a trend line, pretty clear trend line on the 1-hour chart, right? Going through all the lows, if we ignore the spikes, of course, here, as that was false breaks. If it will make the break below this support, which means below 128.90 approximately, and place itself there and hold it there, that's pretty much a strong bearish call with a small protection above the last high that will be created, right? And a final target of this important support, 127, that could turn to be a really worthy trade. So two scenarios for the euro dollar, starting the sell in between 129.50 up to 130.30. Sorry, the combination of the bearish hidden divergence and the continuing divergence that should be forming, we could expect a down move to continue from there. The alternative will be if we get a break on the 1 hour chart and the 4 hour chart, actually combination. That's the same trend line. If we go below that and holds there, that could be a bearish call, even before the pair reached the resistance number 3. Okay, that's about the euro dollar. Pound dollar. Also, I'm on a bearish opinion, very bearish opinion, but there is something to remember. This is a bend to bend. Classical? For sure not. Why not? Because it had interruptions. It had interruption here, it had interruption here. But the fact, this is still bend to bend. We should not be trading that alone, but we should remember that what we have. Now, you know my opinion. I was talking about that for a long time. I think pound is going down. So how can we trade it? On the 4 hour chart, there is one problem with this pair, and the problem is it has a clear divergence. Sorry. sorry. Here it created a false break yesterday, as you can see. Right? That's a divergence. Now, from here, okay, it could easily start the pull back up. The pull back up. So, in my opinion, we have two things could happen, and could happen pretty easy. One, pound dollar will rise from here back to the next resistances, like 152.50, maybe even higher, 153.40, or maybe even all the way back to these spikes. I'm doubtful it could do that, but it's pound. Nothing could surprise here, actually, right? More than that, we have a daily, and that's corrected here, a bullish hidden divergence in between these two lows. That's pretty impressive combination, and that's why pound dollar is very, very, very tricky. Right from here, it could start easily the retrace up until it creates another divergence, or alternatively, watch that, that's a very, very strong support, as you can see from the past. Very strong support. Okay, that's our close area. If it managed to close below and hold below, that will lead us for another drop down, probably to the next important support, 150.60. Note, and thank you for reminding that, Pana, that today we have important news from Britain. We have the retail sales, which should be improved, but still stay around the zero, and we have the MPC, of course, meeting. Okay, we have to remember that. That could directly affect on the pound dollar. Just 1 second, please. Right? Right after the news, we will get most likely the direction. If it managed to make the close up, that's a bullish sign, and the pound dollar will most likely start to rise. With a small protection below last low, right here, that could be pretty fair opportunity to the upside. If after the news it finally closes below this 150, 45 range, it closes a 4-hour chart candle, that would be a strong bearish call. Okay, with a small protection above, well, I would say above 150, 180, just for protection, and a target right here on the next support, 150.60. That's the double scenario to the pound dollar. Okay. The next interesting pair I have on the list is the New Zealandian dollar. Based on a daily chart, the New Zealandian dollar has a bearish convergence for the first time after all this beautiful strong range. That's a bearish convergence, right? Of course, this convergence is also from here, right, from this bottom as well, but as we know, the convergence should not be so aggressive angle. From here is pretty clear. That means, very simple words, it should be trading on the downside. As I said not once, we should be looking to sell every rally. Take a look on the 4-hour chart. Between these two lows, we have a bearish hidden divergence. But, and here is a big but, we had a bullish divergence before that. It means New Zealandian dollar can also rise up to the third resistance, and that means, this is the second, and that will be the third. The third is a range. The third is right here, around 0.83 up to 0.8380. There is also very powerful trend line waiting on the same place. Make long story short, I think New Zealandian dollar is able to break to the upside easily, and to make it available to be traded for us, it has to close above 0.8190. Once it does, and it holds above that, an RSI should be placed above 50, of course, that would be pretty strong bullish call. Final up move is right to here. Final target of the up move is right here. That's what we could expect. But because of the daily bearish convergence, right, the bears could easily win, and for that we have pretty clear sideways right now. It has to go below that. It has to break this range to the downside in order to continue lower. Right? It has to go below 0.8130. If it does go below that, that's a bearish call. Final target for the New Zealandian dollar, as I said not once in my opinion, is right here, below 0.80. That's my opinion. About the New Zealand dollar. Sell the rally, and we have two ways to sell it. One, sell the third resistance. Two, yes, as for now we keep the sell limit. As for now we keep the sell limit. I might update it because a bit higher because of the third resistance, as I explained. As for now, I hold it exactly there. Okay. Alternatively, if it makes the break of this range, we are going down. Okay. Panda, because we have a bullish divergence before. Here. We used the third resistance as the potential final target of this correction. We notice that on the daily chart we have a bearish convergence, which means that we should be looking to sell the rally, and based on the 4-hour chart bullish divergence, it could rise to the third resistance, right? And that's why if it breaks it up, it could make, well, this duplication kind of, something like that, right? Something like that, make a duplication, or maybe higher, bit higher to the third resistance, or alternatively, because of the bearish convergence and this bearish hidden divergence it has right now, right? That could be a clear breakdown of this range and continuation. That's why we have two scenarios. Okay. two scenarios to be prepared for. Which of them will work? Honestly, no idea, and I think it's not clever to try and to predict it. Okay, and that's, in my point of view, the main opportunities and the main pair, except the ones we have. We have the Aussie Kiwi, which also is playing around the bottom. As I said, and I said not once, it is able to push bit lower. It is able to push bit lower, but the low is creating. The low could be right now, and the low could be bit low around 119, 118.50. It's also very logical. Just for another leg of this divergence, another low to create this divergence before making the push up. And from here it could easy, on any time, start the pushing up to 123 or so, anytime. If the intervention will be real from the New Zealandian central bank, then they will hold this 120 as they do right now, probably. And at the end, the push up will happen on the natural side. This, the bottom is close. It could be right now, it could be a bit lower, but based on all charts, weekly and daily, it's pretty clear. We have the pound franc, also another pair we have on the investor style. We have 20 candles right now, around the 20 MA. It should go and make the push to the downside, which is the opposite Bollinger Band. That's why we hold this pair. If it pushed higher, then we have 149 plus to go and to execute another sell before the deeper down move. The bearish pressure is here, and that's why this pair should be turned into the downside, not the upside, to the downside. Right? We have, what is that? Aussie CAD. We have the Aussie against the Canadian on the list. I still don't do nothing here because, as I said, I want to see clear divergence forming. So far, I didn't see any clear divergence on the daily chart. That's why I will not be surprised if we'll see another push down first of all before the strong retrace. I leave it alone right now. Okay. Still following it on the list, of course, Aussie Canadian. As for now, leave it alone. So to make and of course, there was a question about the dollar yen. Well, dollar yen, if you know, there will be on 10:30 Tokyo time. I'm not sure when exactly it is. Kuroda will hold the press conference. You can see here some related stories on Bloomberg. Right? They are keeping the purchase without any update. I think that this level will be now incredibly powerful, the 102. Once it places itself below the 102, that could be very strong bearish call. As we have here a trend line, we have here a support. It still could play around that before making the break. He already did, Pana? So, okay. So, 102 has to be broken in order to start the down move. I remind you, in my opinion, the daily chart still taking us and still moving sorry, inside this incredible megaphone that is forming. So it has to be broken in order to continue to the downside. And that's what I'm looking for actually, 102. Before that, there's nothing to do with that. Nothing to do with that. Of course, the same as for the euro yen and pound yen. It's still around the same range of levels, so really nothing. Only with the weekly candle pattern, or at least the clear daily candle pattern combination, only that could give us an action. DAX, be prepared. Where is that? Here. That's the DAX. Reaching the range of the harmonical pattern, as we talked 2 or 3 weeks ago. Okay, it's reaching very important level, and taking a look on a daily chart. Okay, it has straight ride, and it's creating right now a continuing divergence. It could happen anytime from here or a bit higher, with a daily bearish candle pattern with the current continuing divergence. That would be here a pretty strong bearish call. On the 4-hour chart, much more than 20 candles, right? It started right here. That's what we could expect it to come to. Alternatively, of course, we're following this trend line, and the break below the trend line gives the okay to go. So far, no need to do nothing. Okay? Follow close as the weekly harmonical pattern, the daily band to band with divergence combination is forming. So it could happen every day, any day, today or within a week. It's open, and that's why we are on a follow list. About all the others, exactly the same. We can see they're all playing around a top, and they're having troubles to create new highs, as we can see so far. There was a question, what's my opinion about the gold and the silver? Well, I think up, but they're really so risky. The one thing I do love is that we have 20 candles ride on a Bollinger Band weekly chart. 20 candles right. There is one thing I don't like, and that's that we do not have a classical continuing divergence or any other type of divergence. Still, I think to the upside, I prefer it's like a holding and not a trading. So my opinion is bullish. Every new drop is an opportunity to increase the buys. That's my opinion about the gold and the silver. So, friends, to make long story from today short, we have several wonderful things on the list, and that's Euro Aussie number 1, and from my point of view, this is the best one. Then we have the Euro dollar and the Pound dollar, 2 scenarios for each, and the New Zealandian dollar actually. Each of them we have clear 2 scenarios. We have the Euro Pound. We are looking to buy every pullback, right, until it creates the next bearish divergence. We have the Pound Franc running. We have the Aussie Kiwi running. And the dollar yen, we have the 102 on the following list. That's the main things which I think we should concentrate on. That's all. That's pretty much all. Well, about the oil, there's a question about the oil. The oil has no, about the indices. There is nothing new, as I said, nothing new. Right, they all for long run, and they could play. And it probably won't be changed on every day, on any other day. The oil is very interesting as it has a resistance and a continuing divergence, as you can see here. At the end of this day, if it finishes bearish as it looks, that could be a pretty interesting sell opportunity. With a quick 20 MA as a first target, and if it's a double top or a wedge, so we have much more potentially to go. That could be very interesting opportunity at the end of today. So far, I wouldn't deal with that. Well, natural gas is tricky. It did the down move we talked about. Now, I think it's able to push it higher, back to 470, 480. I would not be dealing with the gas, as I think it's going to make a bend to bend here, and then probably for a duplication. I will be following that much closer when it completes this up move. So far, I don't have nothing actually. No opinion about this one. That's all, friends. That's pretty much what we have. That's the best opportunities for today. As I said, Euro Aussie, in my opinion, is the main one. Then we have the Euro Pound, which should be really good. Pound dollar and New Zealandian dollar. Completing the picture with the new trades, except all the other trades we have running. Proud to be back. Sorry for my voice once again, friends. Going to upload this review. I'll see you on the Skype, of course. Thank you very much for being here, and have a wonderful day. Tomorrow we meet on the same time. Thank you. Thanks, guys. See you on the Skype. Have a good day. Bye bye.